What's up, everyone? Man, I haven't recorded any content for at least 1 month now. The last couple of months have been the most stressful part of my life, to be honest. Honestly, there were days where I didn't even know if I had it in me to continue trading because I had health issues with not so much myself, but family members. And then I had a death in the family actually, so I couldn't even trade on certain days. I had a lot of hospital visits, doctor's appointments. So for the month of January has been probably the most challenging month to say the least. Having said that, out of the 31 days, actually out of the 20 trading days, I've only traded 16 days. So this is by far a lower number that I've traded. Every time I try to trade every day, assuming if there are opportunities to be traded. But the month of January, I've only traded 16 days, and the profit I made was a little bit over $11,000. Now, $11,000 is probably my new record because I haven't really made five figures per month yet. In fact, let's go back to my previous year profit. So December of last year, I made 3,000. November was close to 4,000. October was close to $2,000. September was 6,000. August was $520. Actually, August was actually a loss, but I have merged my second account combined here. So I traded the same ticker. The loss is now allocated to February as opposed to August. July, I've made $2,000. June, $4,000 almost. May was $9,000. So in May, it looks like I traded most of the days in May except for May 27th. So I've traded 22 days, resulted in $9,000. That was by far the best month I had from last year. Last April, I had $4,000 profit. March was 4,000 or close to 5,000. February was the $611, and January was the $1,500 here. So let's go back to January, and I'll give you guys a recap. January 2025, and if we were to look at the daily net cumulative P&L, there's a really steep chart here where the past couple of weeks I was on fire, and actually I was making more than normal. In fact, I had made many records in January by trading less. Actually, it's really due to time, depending on how much time I have, what kind of appointments or personal issues that arises. In January, I actually started with a negative. Second week, I had close to $4,000 loss actually. So let's go ahead and look at the biggest loss I had in January. In January, I messed up because I actually put a lot of money on the ZS ticker, Zscaler, and I did dollar weighted average on calls. I'll bring up the trading view for you guys. Alright, guys, I have ZS loaded on my trading view, and essentially I bought ZS call around this area. 1 or 2 days later, it actually dipped a lot, so that was a mistake. After when it dipped, I actually bought more options. So at one point, I broke even almost, but I had decided to hold it longer. When I held it longer, it kind of went against me. So I had took a loss, but the good news was I didn't take 100% loss. I probably took close to like 75% loss. Out of the $5,000 or something I wager, I managed to salvage $1,000 at least. So I sold it around here, one of the candlestick when it was on the green day. Now, if I held on it too longer, there's a chance that I may have took a smaller loss, but I have no idea it was going to spike up on January 28th. So at least I try my best. I minimize my loss as much as possible. But yeah, that was the biggest loss I had in January so far. I had another loss on Friday, the same week. So on Friday, it looks like the loss came from zero DTE call. I was speculating on the direction of SPY or SPX actually, S&P 500 index, and I guessed it wrong. So as opposed to me just closing out earlier, I waited through like maybe half of the day. I'm also working, so it's not like I have time to monitor my trades every minute. every half an hour, every 1 hour, I would just kind of check the stock market price. Or if I'm really busy, I'll set some kind of alert on my cell phone to alert me that, hey, one of my ticker reached X amount of price, and it's up to me to buy or close it out. But yeah, that's the biggest loss I've learned was from the single-legged zero DTE call. I made money on calls too, but that day I've speculated the wrong direction. I ended up taking a big L for that. And then luckily I had some profit from the other setups I did. So I did some zero DTE vertical spread, and I made some profit. Not enough to cover the full $1,300 or $1,700 loss, but it was enough to offset it. Where my loss during that day totaled to like negative $777. But yeah, on Thursday, January 9th, I had doctor appointment, so I really didn't have time to trade. I had to take my daughter to outpatient visit, office visit, so I didn't have time for that. My wife came with me, and then on the 20th, I believe I have another doctor appointment, so that's the reason. No, actually, the 20th, I believe it was some kind of holiday. That's the reason why the stock market wasn't open. And then on the 23rd was the funeral, so I couldn't trade because it was actually my grandma's funeral, so I had to show up. Pretty much took up the whole day. I woke up early. I left the house at 9 a.m. I didn't get back home till 6 p.m. I was constantly away from a computer, so I didn't really have time to do any kind of like swing trading or any kind of trading investment, which is fine, because I was mentally messed up during that day. I was not in the mood to trade. And then Friday, when I got back to my office, actually, I'm still working from home, so I had time to put on one trade. Actually, on Friday, it was two trades, yeah. It's actually still one trade. These are vertical calls. So I essentially buy a call and I sell a call at the same time to create a vertical spread. So really, it's just one trade. It just depends on how it's categorized as one or two trades. But for vertical spread, it always consists two legs. And so I just opened up this trade around the AM time, and it looks like it was heading towards my direction. So I didn't have to manage the trade that much, resulting in a $1,000 gain profit. And actually, to be honest, the past 3 weeks of trading, it looks like I'm hitting my average, above average now. Because on most month or most days, I don't think I even hit $500 on a daily basis. So if we go back to December here, I had maybe like a couple of days within December where I achieved over $500. So December 23rd, December 27th, December 31st. Yeah, so only 3 days within December where I've made over $500. That was my last year target. If I was able to make $500, that would be great. But, it's really hard to stay consistent to make $500. Like I'm almost better off just setting up some sort of monthly objective, which is what I have been doing. I told myself if I'm able to exceed the previous month profit, then that's good enough for me. And then starting this year, I told myself that I would like to make $1,000 daily objective. And on certain days, I would say certainly the last half of January, it seems like I was able to achieve $1,000 or more. I have days where I made over $2,000. Like on January 22nd, I've made over $2,000. And January 27th, I made $2,000 and $200. That was probably the best trading day of my entire career, I think. I think these are all options. Yeah, these were all from cover calls. Half of it came from closing out my cover calls. The market tanked a lot during that day because of DeepSeek. The other half of my profit came from 0 DTE vertical spread and 1 DTE vertical spread. Sometimes I would like to mix it up, especially when I'm kind of confident that the next day will probably fall within the same action as the current day. Then that's where I will go into the 1 DTE. 1 DTE also makes more profit, and I have more time to get it right. 0 DTE is great because even if I'm wrong by like a small calculation, there's still a higher chance of me making profit because there's only so much time left, for the market price to reach the strike price. A lot of times, the market stall within like almost before closing, like an hour or 2 hours. I would say around like 1 to 3 o'clock. That's when the market kind of stalls the most. Market generally doesn't spike up or down. The majority of volatility comes from the first hour of the opening bell and the last hour before the market closes, based on my experience when I observed the S&P 500. So that kind of led me to believe that, certain hours are better to maybe do the 1 DTE, because since the time will stall and you have more times left. And 1 DTE, you will collect more premium too, as opposed to 0 DTE. So I feel like right now my primary driver is still 0 DTE vertical spread, but I've also dabbled with 1 DTE vertical spread. So those are kind of my favorite setups, as well as cover calls. I also still trade these like single-legged options every once in a while. Like for example, right now, I pretty much don't have access to my main account. I'm actually in the process of transferring over from my Fidelity broker to Tasty Trade. And so sometime mid next week, I should have access to my full account on Tasty Trade. And Tasty Trade is where it has the best UI for complex option trading. When I tried trading it on Fidelity, it seemed like the app crashes and it takes a long time to load. There were definitely moments where I missed some opportunity trades, so I was not happy with that. And Tasty Trade offers lower commissions. I'm sure Fidelity offers certain features that Tasty Trade doesn't have. I'm sure it is just a matter of time till I figure out if I like Tasty Trade better than Fidelity or even Schwab, Thinkorswim. I've also made some trades recently with Schwab, Thinkorswim. Apparently, the same creators who had created Thinkorswim, they had came out with Tasty Trade. Tom Sonoff and Scott Sheridan. They were the two, I believe, the only two founders for Thinkorswim. They have other developers that were involved, but they both were the lead that created the software. And Tasty Trade, when I use it, just for analyzing stocks and charts, it looks pretty decent. I haven't really traded on it yet, but I was getting the feel of placing orders, getting ready to like set up my vertical spread strategy and set up my strategy a lot faster, compared to Thinkorswim or even the Fidelity Active Trader Pro. Okay, let's go back to my January month. Yeah, so it looks like sometime around January 15th, that's when I sort of set my objective. I had told myself, based on how I was trading, my capital grew a lot more compared to the beginning of last year. So I told myself, it is possible to make at least $1,000 a day. Now, my number one rule is still to preserve capital. If I'm not able to make $1,000 a day, I will not force it. Because if I set a daily goal to always make $1,000 a day, I'm only asking for losses, right? My number one rule is to still preserve capital. As long as I have capital, regardless if it's a win or a losing trade, I have enough capital for the next battle. So that's still my first rule. Second rule is, or second objective is to make $1,000. That's my target goal. That doesn't mean I have to. It's just that I want to. $1,000 a day. But of course, always preserve capital. Even if you risk so much in a trade where you're 100% sure it will go in your direction, but sometimes things happen. Always expect the unexpected, because no one really knows where the stock market's going to go. At any given day, any kind of articles could be published and it kind of tank the market overall, or some news article could spike up that stock price that you're trading, right? So always expect the unexpected and preserve your capital. There's always opportunities the next day. That's what I told myself. Even taking this like $3,500 loss, it was really hard to take a loss, because if I took a loss in December, I was actually going to maybe say 50% of my capital. But instead, I waited to January. I took 75% hit or so, or maybe 80% hit. So, that's something that I've kind of learned over time, was to minimize the loss as soon as possible. Don't wait, because there's opportunities every day to make money. This is one of the bigger losses I had since last year. But yeah, overall, I'm still somewhat proud of myself, but not really, because there were a lot of days where I didn't trade it. I really want to trade the past week, but I couldn't because my assets are in the process of being transferred. It's called ACAT transfer. So it's in the process of being transferred, and I couldn't really trade anymore. And also, if I have any assets that's about to expire, the transfer get rejected. So that's what happened to me too. I had a couple of call options. They were actually covered calls. So regardless of what happened, I'll make profit at the end. But because they were getting ready to expire, the Tasty Trade CEO, or one of the customer service rep, told me that due to the transfer policy, anything less than 2 weeks will not be transferred correctly. So I had to close those out. Luckily, the market tanked on one of the days here on the 27th, I believe. So that's where I close out my cover calls for Riot, NVDX, that's Nvidia's leverage ETF, and SOXL. So I'm still holding shares for these stocks. These are great stocks to continue generating premium, and eventually I'll close it out. I was actually going to close out my SOXL, but I had a cover call on it. And I was actually busy at a dental office too, so yeah, I missed out my chance. But I had a lot of cash on SOXL, which is fine. I'll just still continue selling cover calls for these. Yeah, February is going to be a short month, so I'm expecting to start trading maybe back in either the 5th or the 6th. I'm not really sure when I'll have my account back. But having said that, I think we're looking at less than 20 trading days. So if I get my account back on the 5th, and if I'm able to start trading, make some kind of trade on Tasty Trade, actually, it's a brand new interface, so it may take me a little bit longer to get familiar with the setups. But I've been practicing it. I've been watching a lot of videos to get familiar with that. So I'm still going to have at least maybe 15 days or something trading. Assuming February don't have any more holidays. So it's 15, 16, okay, maybe 18. There's a good chance I may have 18 trading days in February to make some kind of profit. So we'll see how it goes. Part of me wants to make $15,000 up to $25K a month. But I'll see how it goes, because I really don't want to push it. It just depends on the opportunities. Because it's easy for me to lose money too if I'm trying to target a certain number. It's just wherever the market brings me to. Sometimes it's not even possible to collect the full premium off of a vertical spread. Because if I see the market doing a reversal, then that's when I have to kind of close out the trade. I have a lot of these analytics that I set up. So before the market opened, I had my analytics done actually around nighttime. After work hours, I would take a break, and then I'll get my iPad or my computer ready, and then I'll start drawing these support line, resistant line, to kind of speculate on where I think the market is going to move. I will give you guys an example. Here's SPX, and this is the one that I've been trading. So always look at it from a daily standpoint. Daily time frame, I'm looking at it. I'm like, okay, there's a big drop on SPX. What are the odds of this reversing back to maybe slightly recover at least? Maybe not 50%, but maybe 25%. So right now it's still hard to tell. I have to rely on pre-market and after-hours trading. So a lot of the time I'll just rely on SPY, because SPY is a ETF traders can trade after hours and pre-market. So this is what I would kind of look at on a nightly basis. Like right now, SPY appears to close lower, and even after hours, there were trades that pushed SPY to the downside. 1,000 volume was traded. It's still not a lot of volume, but still, this is like a signal that tells me, okay, if there's still selling going on, and then I have to wait for the futures to be open on Sunday night, I'll look at those, and then I'll look at the pre-market and see how is SPY trading. If I see long red candlesticks towards the downside with heavy volume, then I know that most likely SPY will likely probably open a little bit higher but close lower. And that's where I'll set up some kind of maybe vertical call spread. It really depends on the movement of the candlesticks. And the second thing that I also check is the economic calendar. So for next Monday, do we have any major economic news that's like 2 stars or 3 stars? So there is ISM manufacturing, PMI. This could kind of give us a sense of inflation, maybe. Fed talks later on throughout the day. So, this could potentially change the market. But a lot of time, I'll just look at the pre-market, after market, and kind of decide, if I should risk more on the call credit spread or the put credit spread. Generally, I would lean towards call credit spread, because when market drops, it goes really fast. So when I do call, you don't collect as much premium, but I feel like it gives me like a higher safety net. Whereas for the put credit spread, I have to do it further out, because when it drops, it can tank really fast, quickly. And it's easy for me to lose my profit I made in January. So those are things that I'm kind of mindful every time. It seems like I have a lot more subscribers than last month. And a lot of you guys are probably beginners trader or maybe intermediate traders. As far as advice, I would say definitely review your trades, whatever your trade setups are. Write down on a piece of paper, a notebook, or even buy some kind of like services for trade journal, like what I have right here. Definitely review it every time. I'll spend at least 1 hour on Saturdays, at least 1 hour or more, and then I'll start reviewing my trades as well as assigning the strategy that helped me make the profit or the loss. So, like for example, here I've performed some kind of 1 DTE vertical spread on the put side, and I label it together. So then from here, I'm able to look at it and see, well, towards the end of the month, which ones made the most money and which one lost the most money. So for January, I was able to tell, okay, January 8th, I lost the most money. It's probably from that ZS call trades, a single leg trade. And I learned to maybe not, focus so much on single leg options trade on these, like maybe small caps to mid caps. But maybe focus more on large cap and mega caps for single legged option trading. But for multi legs, trading SPX is good enough already. I don't think I have to trade anything else. Maybe NASDAQ, NDX is another possibility. Maybe futures. With Tasty Trade, it is possible to trade futures. So, that's something that I've been thinking about for quite some time. I've been reading up on that. So I have a lot of knowledge in futures. I just haven't traded it yet. I would say, yeah, definitely review your trades, preserve your capitals, and analyze the stocks that you're planning to trade or index. Analyze the pre-market, analyze the after hours, look at the futures, check the news, factor everything in, conclude a strategy that will give you the highest profitability. I always tell people the stock market, in a way, is still like gambling, regardless if it's long term or short term. You're risking money to make money. So, in my opinion, it's still gambling, but you're gambling with an edge or with some sort of probability, right? There's a term that I believe Tasty Trade came up with. It's called POP. POP stands for probability of profit. So when you have a high POP, you have a high chance of winning. So those are kind of the setups I look for, or options or stocks trades that have a high POP. Always look at it from a daily time frame and then break it out further, maybe 4 hours. Look at it from different angles and see if it still follows the same thesis as what you initially had for the daily time frame, and then break it down by the hourly time frame and see if it still follows the same thought process. Half an hour, and then for me, 15 minutes is actually the lowest I would look at, because anything below 15 minutes is more like for scalping. Unless if you're a scalper, then yeah, look at 1 or 2 minutes. I'm still more of a swing trader. A lot of times, I don't really have to buy something within minutes. Maybe half an hour, 1 hour or so. I may make a trade or close it out. But most of my trades results in either hours or days. It just depends. If I'm trading 0 DTE, I will try to manage it, of course. But a lot of times, if it expires, I will be in profit too. So it doesn't mean I have to open and close the SPX vertical spread on the same day. If it's so far out of my strike price, I'll let it expire. So there's no need for me to close it out, and spend like some extra commission on that. But yeah, looking at the SPY, it looks like something tells me SPY is going to likely drop lower. But then I'm also cautious too, because whenever SPY reach a low RSI, like here's the 1 hour time frame, there's a high chance it may bounce up slightly. It's unlikely it will bounce back up to the initial point where it drops, but it will at least probably bounce back up at least maybe 25 to 50%. That's something you would have to be careful of. And that's the reason why I have RSI here. See what happened for SPY on the 27th? SPY went down as low as 11 RSI, and then there was a strong support, and it continued to go up. So, RSI is something to look at. SMA, EMA, they're all moving averages. Here's the 4 hours. I mean, someone could say, well, SPY looks like, it's around the middle of the RSI, so this can go up or down. But if we zoom in on the 4 hour time frame, RSI is still 42, which is still high. So if someone were to look at the 4 hour time frame, there's still a high chance of SPY dropping down further. In fact, to be honest, SPY could either drop down to this support level, the 594 level, or the support level we're at right here, 598. This could be the support, because based on previous days, there's a strong support on the 29th, within January 29th around noon and 4 o'clock, it looks like. The second half of the 29th, there's a strong support level. So someone can argue that, well, potentially SPY could bounce up, maybe on Monday when it opens. Maybe the first half could bounce up and then it could continue to dip down if you were to just kind of follow the RSI rate. RSI 4 hours, it can still go below as 30 RSI. I think around 30 is pretty low. That's where buyers go and step in. But it really comes down to the news and see overall. There's also the tariff, that Trump mentioned that he's going to implement for, I think, Canada and Mexico. So that's something to watch out for. So, whatever the case may be, analyze the charts and kind of speculate and see what directions do you think it'll go. Come up with an entry and exit plan, right? Take this serious and come up with a game plan before you trade, because you are risking money to make money, right? All right, that's all I have. All right, thanks everyone for the time. Like and subscribe. Talk to you guys next time. Peace.